have you ever stopped to think about what actually props up the global economy? And I don't mean, banks or trade agreements or even the tech sector.
Right, the usual suspects.
Exactly. I
Oh.
mean, the literal physical foundation of it all. Because there is this statistic in our sources today that just completely shifted my perspective.
That's a big one.
It really is. So according to the analysis we're diving into today, more than half of the entire global GDP, so we were talking around $58 trillion, is fundamentally dependent on nature and ecosystem services.
It is just a staggering number when you hear it out loud. I mean, $58 trillion.
Yeah.
And it completely reframes how we typically view the natural world, right? It takes nature out of this realm of pure conservation.
Like, saving the whales.
Right, saving the whales or planting trees just because it feels good. And it places it squarely at the center of global macroeconomic stability.
Wow.
We're talking about water filtration, soil fertility for agriculture, natural flood defenses, because without those, the economy just grinds to a halt.
Yeah, that $58 trillion realization, that's really the engine driving our deep dive today. We're looking at a pretty fascinating analytical text. It was published on June 30th, 2026 by Lim Hock Song.
Right.
And it's titled, Sustainability is Sabah's Natural Competitive Advantage. So our mission for you today, listening, is to explore how a region that is just absolutely blessed with abundant natural resources can take historical pitfalls.
The famous resource curse.
Exactly, what economists call the resource curse, and how they can flip that into a 21st century economic powerhouse.
Because for a really long time, the prevailing wisdom was just that if a region had abundant natural resources, prosperity would just naturally follow. Like, you have gold, you have timber, boom, you're rich.
Push. Dig it up.
Yeah. But the historical data actually tells a very different story.
And I want to make sure we're setting the right tone here, right out of the gate for you. Because this is not just a story about environmentalism, is it?
No, not at all.
This is a masterclass in industrial strategy and capital allocation and, honestly, economic survival. But to really appreciate where things are going, I think we need to look backward, Akshay, right? Just to understand the baseline.
Absolutely.
Like, why is it that so many resource-rich regions completely fail to achieve lasting wealth?
Well, to understand that, we really have to look at the 20th century economic model.
Okay.
For decades, economic development in resource-rich areas was entirely driven by extraction, just pure extraction.
Right.
Forests were valued strictly for timber, minerals were for mining, fossil fuels for energy, oceans were just for industrial fishing.
Just taking things out.
Exactly. It was a model built on extracting maximum volume for quick, immediate returns, get it out of the ground, sell it, repeat.
It's kind of like, it's like that one guy we all knew in high school who is naturally gifted at sports.
Right.
So he never actually learned how to study or develop any other skills.
Right, yeah.
And then reality just hits him incredibly hard at age 25.
Yeah. That is actually a highly accurate way to look at it. I mean, the lure of those quick, massive returns from resource extraction actively discourages a region from doing the hard work of innovation.
It makes them lazy almost.
Exactly. It stifles economic diversification. It stops value addition. When you can just dig wealth out of the ground and sell it on the global market, you're far less likely to invest in, complex institutions or knowledge.
Or talent.
Right. The talent you actually need to build a resilient economy. So abundant resources, without a highly sophisticated strategy, they actually become a liability.
Okay, let's unpack this. Because the text uses a really brilliant framework to explain how to escape that curse.
Yeah.
Right. It brings in Harvard Business School professor Michael Porter.
Yes. Michael Porter's concepts are completely foundational to understanding this transition. He argued that long-term success requires two distinct elements.
Which are?
Strategic positioning and operational effectiveness. And it's vital that we don't confuse the two.
Honestly, I always get those mixed up, so break them down for me.
Sure. So operational effectiveness is simply doing the same things as your competitors, just better.
Okay.
It's continuous improvement, it's efficiency, it's cutting costs. But Porter argued that you cannot build a long-term advantage just by being efficient.
Because everyone else just copies you.
Exactly. Eventually, everyone else catches up. Strategic positioning, on the other hand, that's about choosing a unique way to compete.
Okay, I see.
It's looking at your distinctive strengths things your competitors cannot easily replicate, and building your entire economic identity around them, so doing things differently, not just better.
Right.
And this doesn't just apply to companies, It applies to cities, states, entire countries.
Yeah, the text gives some really great examples of this in action. Like Silicon Valley didn't just have smart people, it positioned itself as the absolute center of technological innovation.
Precisely.
And Switzerland, they did the exact same thing with precision engineering and global finance. And Singapore, they leveraged their geography to become the master of global connectivity and logistics.
Right. They didn't just possess raw assets.
Wow.
They built highly specific, very supportive ecosystems around those assets, and they did over decades.
So it takes time.
Yeah. And that is the crucial distinction for a place like Sabah. Identifying your comparative advantage, like having abundant natural resources, that's merely the starting point.
It's just step one.
Exactly. Sustainable competitive advantage comes from deliberately building a unique strategic position based on those comparative advantages and then relentlessly executing that strategy.
I was thinking about this, and the best way I can describe it is this. Having abundant natural resources is like inheriting a massive trust fund.
Oh, I like that.
Right. It's a great comparative advantage. You're starting way ahead of the pack. But unless you have the strategic positioning to invest that trust fund wisely,
Okay.
rather than just, spending the capital on fast cars and big parties, you eventually end up broke.
Yeah, the money runs out.
Exactly. So Sabah's challenge, and really the challenge for any resource-rich region, is turning that inherited trust fund into a thriving, self-sustaining business.
Right, you cannot just draw down the principal. You have to generate yield. And that brings us to the present reality, really, because the global market has fundamentally changed the rules of how yield is generated.
Right.
The market no longer rewards simple extraction. It is actively demanding sustainability.
I have to say, the scale of this transition, like when you look at the raw numbers in the source, it just blew my mind.
What's fascinating here is that sustainability has completely transcended its origins. It is no longer just some United Nations environmental agenda that people talk about at conferences.
Yeah, it's real money now.
It has become hard industrial policy, aggressive investment policy, and core economic policy. This shift is being driven simultaneously by regulatory pressure, by the demands of younger generations,
The
and
math.
yes, the stark mathematical reality of climate risks. Insurance companies and banks are actually pricing this in now.
And the source gives us the actual numbers to prove this, which is wild. Global energy investment is projected to hit $3.3 trillion in 2025. And out of that $3.3 trillion, approximately $2.2 trillion is being directed specifically toward clean energy.
Think about that ratio.
It's massive. Furthermore, carbon pricing mechanisms now cover nearly 30% of global greenhouse gas emissions.
Which raises a really important question, though. Because with all this capital moving, why does it still feel like we're behind?
Yeah, why is that?
Because the transition is not just about allocating money. It is about completely restructuring industrial supply chains.
Okay, wait, let me stop you there and just push back slightly on all this top-level optimism.
Sure. Go ahead.
Because it's really easy to throw around trillion-dollar figures, right?
Yeah.
And talk about paradigm shifts. But the source explicitly notes that attainment of the UN's Sustainable Development Goals, the SDGs, is actually falling far short of aspirations.
Yes, it is.
And the reason isn't a lack of desire. It's because execution has turned out to be brutally hard. I mean, this isn't just about passing a few green laws. We're struggling with the actual operational how-to of rewiring how the global economy generates value.
You are absolutely right to highlight that friction. Execution is where the theory hits the wall of reality.
Yeah.
Because this execution is so incredibly complex, the global market hasn't just tweaked the old system. It has spontaneously organized into an entirely new economic ecosystem built around three distinct pillars.
Okay, let's dive into those pillars, because this is where the abstract concept of a sustainability economy becomes very real very fast.
All right. The first pillar is cleaner alternatives.
Okay.
This is about replacing conventional, high-impact products and services with sustainable versions. We're talking about renewable energy, electric vehicles, battery manufacturing, sustainable construction materials, certified sustainable agriculture.
So physical replacements. The text mentions a lot of companies dominating this space, like China's BYD in electric vehicles or Denmark's Vestas in offshore wind.
Right.
But the one that really caught my eye was Scandinavia's Stora Enso.
Oh, that's a great example.
Yeah, because they're a forestry company, but they haven't just continued logging and selling 2x4s. They are extracting far more economic value per tree by turning wood into advanced biomaterials.
That is a perfect example of moving from extraction to value addition. Stora Enso is literally extracting lignin, which is a polymer found in wood, and developing it as a renewable replacement for graphite in electric vehicle batteries.
Wait, wood into car batteries.
Essentially, yes. So instead of just chopping down a forest to make paper or cheap furniture, they're integrating their natural capital into the high-tech energy transition. They are redefining what a tree is worth to the global economy.
That is incredible. But here's the catch. You can't just build a million wind turbines or transition an entire paper mill to a battery laboratory for free, right?
Absolutely not.
And that absolute need for capital forces the creation of Pillar 2, which is the enabling industries.
Right. You cannot build a multi-trillion-dollar clean energy sector without the financial and analytical scaffolding to support it.
Right.
This pillar includes green finance, impact investing, carbon markets, ESG advisory, sustainability reporting. I mean, sustainable investing globally now exceeds $30 trillion.
Okay, I see the term ESG everywhere, but let's actually define that for a second, because it can feel like corporate jargon to a lot of people.
It definitely can. It stands for environmental, social, and governance.
Okay.
At its core, ESG is a framework that helps stakeholders understand how an organization manages risks and opportunities related to those three areas.
So it's about risk management.
Exactly. It's no longer just a buzzword, it's a rigorous accounting standard. If a company wants a loan from a major bank today, that bank wants to know the climate risk to their supply chain.
Wow.
And that requires armies of auditors, data scientists, and analysts to measure and report those metrics accurately.
Which totally explains why the geographic competition for this pillar is so fierce. The text notes that Hong Kong and Singapore are actively competing right now to become Asia's leading green finance hub.
Oh, fiercely competing.
Yeah, you have traditional financial heavyweights like BlackRock and Goldman Sachs, alongside consulting firms like PwC and McKinsey, and they're employing thousands of ESG specialists. It's a massive job creator because you need actual human beings to verify all this data.
Yes. And that infrastructure of capital and verification, that paves the way for the third pillar.
Okay, Pillar 3.
Right. So if Pillar 1 is replacements and Pillar 2 is enablers, Pillar 3 is emerging markets.
Emerging markets.
These are entirely new industries being built from scratch to address climate and biodiversity challenges directly.
Here's where it gets really interesting to me, because we aren't just talking about solar panels anymore. The text brings up the sustainable aviation fuel market, or SF.
Yes, SF.
Honestly, when I hear sustainable aviation fuel, my first thought is, is that actually a viable market yet, or is it just industry greenwashing?
Well, it is rapidly becoming a very real market. The expectation highlighted in the text is that the SF market will grow from around $2 billion today to more than $25 billion by 2032.
That's a massive jump.
It is. Companies like Nest and Total Energies are heavily investing here because airlines have no other immediate technological path to decarbonize long-haul flights.
Right. Because
They can't run a 747 on batteries yet. They desperately need this new fuel industry to scale.
The part of Pillar 3 that really stopped me in my tracks, though, was the biodiversity aspect. The text notes a biodiversity financing gap estimated at $700 billion annually.
Annually, yes.
To solve that, the source talks about biodiversity credits and something called eDNA, which is being advanced by companies like Illumina. But wait, what actually is eDNA? Are we talking about scientists going out and swabbing tree bark?
It's a bit more advanced than that. Think of it like a crime scene investigation, but for nature.
Okay.
eDNA stands for environmental DNA. As animals move through an environment, they leave behind trace amounts of genetic material. Skin cells, scales, feces.
Mucus.
Gross, but fascinating. Exactly. By simply taking a scoop of river water or a soil sample and sequencing it, scientists can tell exactly which endangered species are living upriver or in that forest.
Without even seeing them.
Right, without ever having to physically see or trap them.
That is wild.
Yeah.
So you can prove to an investor that a specific endangered tiger or a rare frog is actually thriving in the area they are paying to protect just from a cup of water.
Exactly. It provides the hard data required to create a reliable biodiversity credit. Australia is currently pioneering these markets.
Right.
And Indonesia is demonstrating how mangrove restoration can generate carbon finance while strengthening coastal resilience.
It is a profound conceptual shift for you as a listener
Yeah.
to digest. We all intuitively understand how to price a barrel of oil
Right.
or a ton of raw timber.
Sure, it's tangible.
It's physical. You weigh it, you burn it, you build with it. But translating this into plain English, it's about looking at a living forest and figuring out a way to literally put a price tag on keeping it alive.
It is.
It requires a completely different kind of economic imagination.
If we connect this to the bigger picture, it requires recognizing that the complex interactions within a living ecosystem, the way roots prevent flooding, and the way canopy cover cools the local climate, that has immense value.
Right.
And that realization is the perfect bridge back to Sabah. Because if you map out those three massive, multi-trillion-dollar global pillars, the question becomes, where does a place like Sabah actually fit into this puzzle?
Well, Sabah has exactly what the world is desperately trying to price and protect. I mean, the text outlines these world-renowned natural assets. You have Sipadan, the incredible Danum Valley Milieu Basin and Bach Canyon Conservation Area.
The Damai landscape.
Right, the Damai landscape and the Kinibatangan floodplain, vast tropical rainforests,
Yeah.
and crucially rich indigenous knowledge about how these ecosystems actually function.
But here is the strategic reality check from the source. It would be entirely unrealistic to expect Sabah to just magically jump straight into the highest value-added segments of these new industries from day one. They aren't going to suddenly unseat China's CATL and battery manufacturing tomorrow. That is not their competitive advantage.
So what is their entry point? If they aren't building the batteries, how do they capture the wealth?
Their strategic entry point is to position Sabah as the ultimate living laboratory for sustainability innovation.
A living laboratory. I love that phrasing. But let's make it concrete.
Okay, think about all those emerging markets we just discussed in Pillar 3. If a global company or a research institution wants to develop new eDNA monitoring systems or test a new biodiversity credit mechanism, they cannot do that in a sterile environment.
In a lab somewhere.
Right. Sabah has the ideal real-world tropical conditions. Its forests, its coastlines, its rivers provide the perfect, incredibly complex environment to deploy these nature-based solutions through active partnerships.
You wouldn't put a brand new car model on the highway without running it through a real-world crash course first. So Sabah is basically that crash test facility for global green tech. You can't test a mangrove carbon credit on an Excel spreadsheet in an office in Geneva. You need real mud, real tides, real humidity, real ecosystems to prove that the financial model actually works in practice.
You have to get your boots muddy.
You have to get your boots muddy.
That is spot on. And while Sabah serves as that living laboratory, it can simultaneously build its leadership in areas where it already has a head start.
Like what?
Things like sustainable palm oil, sustainable forestry, ecotourism, sustainable aquaculture. The strategy is to find the right entry points through co-investment and niche specialization, and then progressively capture more and more economic value while safeguarding those underlying natural assets.
Okay, but this brings up a huge operational question for me.
Sure.
If Sabah is this perfect, irreplaceable crash test facility, what is stopping it, or any fundamentally resource-rich region, for that matter, from just instantly dominating this space today? Like, why hasn't this happened already?
The answer lies in who is actually running the experiments in that laboratory. Ah, okay.
The text makes a very sharp distinction here. While nature is Sabah's comparative advantage, its true competitive advantage will not come from the trees or the rivers. It will only come from its human capital.
I mean, think about it this way. A Wall Street bank could theoretically wire $1 billion to Sabah tomorrow to buy a massive portfolio of biodiversity credits.
Sure, they have the money.
But if there aren't local auditors who understand how to accurately measure that biodiversity, if there aren't local lawyers to write the specialized contracts, and if there aren't local scientists running those eDNA water samples,
The money just bounces back. Or worse, it gets mismanaged.
right, the trees don't manage the money, the people do.
That is the ultimate bottleneck. The technology, the financial capital, the advanced ESG frameworks, those things already exist globally. They are highly mobile.
Yeah.
The thing that determines whether a region succeeds or fails in this transition is local capability. Can the local workforce actually mobilize that global knowledge and investment to create value locally? Which means transforming this legacy economy isn't a quick fix. As the text states, this is a marathon. It requires intense, sustained investment in education and research capabilities, in embracing artificial intelligence, and continuously reskilling the workforce.
You need world-class institutions and absolute policy consistency over decades.
Decades, yeah.
Identifying sustainability as the strategic position is only half the battle. The world is full of brilliant strategies that failed because of poor execution. Empowering the people to manage that natural capital wisely, that is the hardest but most vital part of the equation.
So what does this all mean? When we look at Lim Hock Song's analysis of Sabah's economic evolution, it proves a fundamental truth for the future global economy. Simply having abundant nature isn't enough anymore.
No, it's not.
Moving away from the resource curse and into a true sustainability economy requires a massive psychological shift. It requires treating nature not as a cheap commodity to be mined and sold, but as the foundational infrastructure for high-tech, high-finance, and high-skill industries. It is the ultimate asset, and it demands the ultimate level of management.
It does. And, it leaves me with one final thought to consider based on everything we've talked about today.
Yeah, let's hear it.
We talked earlier about how the text mentions traditional financial hubs like Singapore and Hong Kong racing to dominate the enabling side of green finance.
Right, they want to be the bankers for the sustainability economy.
Exactly. But as regions like Sabah begin to actively harness their own massive natural capital, and as they successfully build the local human capital to manage these complex biodiversity credits and eDNA markets, a geographic shift might occur.
Oh, interesting.
Will the traditional power centers of global finance ultimately have to relocate closer to the actual living laboratories of the world? If the real tangible value is being generated in the tropical rainforests and the mangrove ecosystems, it makes you wonder what the financial capitals of 2050 will actually look like.
That is a fascinating question to leave you with. If $58 trillion of the global economy is dependent on nature, maybe the real Wall Street of the future will be located right next to the Kinabatangan floodplain. Thank you for joining us on this deep dive. Keep questioning the world around you, keep looking for those underlying systems, and we will catch you next time.